This is our Forex blog for April 28th, 2014. We released a new version of our software over the weekend that has a new Forex signals on it. For those of you who don't want to learn how to trade and just be told when to buy and sell based on very sophisticated trading methods. Here's the pound dollar. You can see small win, win, pretty much break even, nice win, 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 moderate win. We caught the low Sunday night, which one of the new methods that we put in, it's not in the current version but will be in the next one, is it finds intra-bar swings like this, and at these fib targets finds very high probability reversals. That's brand new, just put that in. Caught a huge 60 pip move up today. And here's the euro dollar, which also did pretty good. On Sunday it had a short, wrote it down, found the low, which is probably a fib of this last move up. We nailed the high here and a nice little sell here for about 15-20 pips. So our Forex trading signals are coming along extremely well. But for those of you who want to learn how to trade, one of the best methods of trading is using our currency indexes, which you can see right here. This lets you see visually what each individual currency is doing. And basically, in a nutshell, you want to buy the strong currencies versus the weak, and when you want to sell the weak currencies versus the strong. You can see the euro was trending down today, double bottomed, very high probability sign of a reversal when you have a double bottom like this, and especially once it breaks out over the high here, it's pretty likely to go up. You'd want to trade that against a currency that's weak. You can see the dollar was above its hourly moving average in gray, but really wasn't that strong, wasn't up above the previous day's high, nor was it at the upper bands. Broke down underneath the hourly right here, so it's a no-brainer to buy the euro versus the dollar. We were already in the euro dollar long based on our methods, but even at that time of the day, 2:30, somewhere around here, you could have bought the breakout of this little high right here, and you could have bought somewhere around 27 and got into this trade about 7 pips later than we did by using the currency indexes. You can also see the yen had broken down from above to below its hourly moving average early in the day. So you could have, with a strong euro at 230 and weak yen, simply bought the euro yen at that time around 230. And you can see this already started to go up. You're looking for buys at 230. It took it about 30 more minutes, and you're in this trade here at 141.36. And even if you got out somewhere in the middle of this range right here, you can see you made about 35 pips. And when one currency is strong and another one's weak, there's really two ways that we look to get into that trade. The first one is, sideways rectangle breakout, which you can see here and here. And then my preferred method is to wait for a pullback. You get in, your stop's underneath the low, and you can see in this case you might have broke even or had a small win or small loss. Second trade worked. Third trade you might have had a loss. You might have got in again here with a small win, and again a nice big win. But basically, the key to trading is to be right more than be right more than wrong, and or have much bigger wins than losses. And the key with our methods is very tiny losses, huge wins, tiny risk, much bigger wins, tiny risk, slightly bigger win than loss, so you had the potential of it there. Small risk, bigger win, small risk. In this case, your risk is what you lost, but the next trade you probably would have got most of it back, and if not, you got it back on this one. You can see the wins are many multiples times bigger than the losses, and that's the key to trading. On a series of days and weeks with bigger wins and losses and being right more than you are wrong, you're going to make money trading. That's the key. Now, if you're not right more than half the time, or your wins aren't many multiples more than your risk, then you're probably going to lose money trading. It's that simple.